How trend following makes money. Trend trading might just be the simplest possible way to trade the markets. It's easy to understand, and nearly everyone understands the basics of trend following after just a few minutes. If you've ever wondered why you are not making money in the markets, well, the reason is simple. You are trading the wrong markets and you are trading them the wrong way. There are many markets out there, and some of them are in bull markets, even when the stock market is getting crushed. The idea is to go find the best markets at any time and trade those markets, instead of being locked into a bad market. Trends are one-direction market movements that unfold over weeks and months of time. You can look at this chart right here. You'll see at the end of July, in July 2011, the market began a big upward move, and this move lasted for months and months. It lasted all the way through almost to the middle of October here, before it even started to think about reversing. So these trends are big movements that last a long time. This market made a huge move in one direction. Trend trading picks out markets as they start to trend and then makes trades in the direction of the trend. Successful traders jump on a trend and ride it. Trend traders were able to get in after the trend began and ride the upwards movement for many months while the market continued to rally. These market movements can last a long time. This is the corn market, and this is a weekly chart, so it lasts several years. You can see it begins down here in January of 2010, so this is almost 2 years worth of market data here. You can see sometime around July of last year, the corn market began a gigantic upward movement and went up, and it lasted all the way through March, or possibly even through May of 2011. So this was a bull market in corn that lasted almost a full year, and this just kind of shows how long these market movements can last. Trend traders got in and they made trades probably several times during this. They made a trade over here, and then another trade during this big bull market right here, and they made money during both of those times. So this corn was a great trade last year and through the beginning of this year for trend traders. Here's the issue. Not every market is in a trend all the time. Sometimes markets move back and forth and don't go into trends for many months or even years. If you just look at a single market, you could wait months or years for a big trend. Any single market might not be in a trend. So, how does trend following make money? Trend trading works by combining a few simple trading ideas into a method that gets money out of the market. And here's how it makes money. Number 1, trend trading scans many markets looking for potential trends. Number 2, trend trading uses cut your losses and let your winners run on every trade. Number 3, trend trading never risks too much on any individual trade. These ideas combine to form a powerful system that gets money out of the markets. Right here is a trade in copper that's happening kind of as we speak right now. It started back in August, and August into September, into the middle of October of 2011 right now. Copper's been in a big downward trend. You can see it's a very nice move. But here, not every market is constantly in a trend. We know that markets go between times when they trend and quiet times when they have back and forth movement. Now here is that same copper market. You can see the big downward trend here, August, September, and October. But earlier in the year, you can see that it clearly was not in a trend. This is the same market as the last slide, just takes a longer time period, and it wasn't in a trend during the first part of this year here. So to be a profitable trend trader, we need to examine many markets for potential trends. It turns out the profits on just a few trend trades per year make up for the times when the markets aren't in trends. And to solve this problem, trend following scans 20 different markets looking for trends. We look at metals markets like gold and silver. We look at grains like soybeans and corn, interest rate markets like the U.S. Treasury bonds, energy markets like oil, currency markets like the euro and the Australian dollar, and some of the soft commodities too, like cocoa and cotton. But simply scanning many markets for big trends isn't enough. You won't make money unless you use all 3 principles of trend following. And here they are again. Numbers 2 and 3, if you look at them closely, you don't make money unless you have good risk management. Numbers 2 and 3 are all about risk management. Cut your losses and let your winners run is about risk management. Never risking too much on any individual trade, that's about risk management. Not every trade is a winner. I've been in the markets for decades, and I've known many very, very successful traders. Some of them are worth hundreds of millions of dollars. These people are very wealthy, and they've done very, very well over a long period of time. And even these traders, every trader has losing trades. Winning traders, traders that make a lot of money, figure out how to manage their strings of losing trades. This is how they make a lot of money. Yes, every trader does make winning trades. The best traders, the great traders, the traders that make a lot of money, they figure out how to deal with those strings of losing trades that every trader has. That's what separates them from the losers. A lot of programs talk about risk management, but don't tell you exactly what to do. This will not be a problem with Trend Following 101. Trend trading uses cut your losses and let your winners run on every trade. Trend traders cut their losses on losing trades early. They also let their winners pile up to run up big profits. This addresses the risk on any individual trade. However, you also face a risk to your account value. Like we said, trend trading never risks too much on any individual trade, but also trend trading never risks too much money on any series of trades. The most important part of trend trading is to make sure you're able to make substantial money on the next trend that happens. It's very important to recognize that you might have a few trades in a row where you're not making money, and you want to be able to make a lot of money when that next trend shows up. And that's why number 3 is very important. The next videos that you're going to see are going to go into details for each of the three principles, and these ideas combine together to form this system. You need to use all 3 of these principles at the same time to be able to get money out of the market. Thanks.